Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, August 12th, the year's 2021. It happens to be Walmal's birthday today, so drop him a line either on Facebook or in the comments here on the video. Okay, today's How to Analyze a Chart, Part 12. This video is for educational purposes only. Your results may differ from mine. Okay, so what are we going to talk about today? I think I've almost run out of tricks to tell you about. Yesterday we were looking at order blocks and imbalances, and in fact I released I think it was batch 6 of the donationals, and it just so happened I have about 2 or 3 imbalance indicators in there. One's a pair multimeter indicator, so you can find when price is in the in an imbalance zone just by looking at the chart. And in fact, a lot of people like the candle color multimeter, but I really haven't seen other people use the multimeters. So, this tells me at a glance what the candle colors are in all the MT4 chart periods here. I can see the day is red, H4 is red, H1, now they're all red. And sometimes just by looking at that real quickly, it might go, wait a minute, you don't want to go long when everything's red, do you? So, I mean, instead of having to look at 9 different time frames, I can just glance and see. And you probably notice on a couple of the charts, let's see, do I have anything else? Maybe I don't have any on these, but sometimes I'll have 3 or 4 multimeters. Now, in this case, I've got the retrace multimeters to see how far price is retraced. And then I also have the imbalance to see, look at the imbalances. So you can see here on M1, you've got 4 imbalances that need to be taken out. Actually, technically, so I don't know if it went back that far. It picked up 1, 2, 3, 4 is what I see right here. So I don't remember how many bars back I'm looking. Show, okay, it's going back as far and showing open imbalances, but that one's not totally open. That's probably why it's only showing 4. Then you can see here over on the daily, we've got 1. And so what it's going to do is it's going to look for the most recent. So since the most recent one is green, it's going to go back and say, okay, we've got 1 green imbalance here. But we also have a red one up here, but can only display one or the other. So that's how that indicator works. So the whole idea is not to have a bunch of different charts up. And I've written literally over 100, probably more, of these multimeters. And they're pretty handy, I think, at least for me. And then, of course, I wrote the candle color that tells you how many each in a row you have. So, for example, on H1, you've got 1, 2, 3, 4, 5, bear candles, red or black, in a row. Sometimes people use black for up candles, so that's why I just say bull or bear, so everybody understands that a little bit better, I think. And you can see here on M5, we're working on a green one in a row. And so, what happens, 3 or more, you start to look for what we call buzzer reversals. So here we had 3 in a row, there's 4, now there's 5. So, based on statistics, you don't get 5, 6, 7 very often. So when you do, that's when you start looking for reversals. So we're in the rat zone. So there's another indication of knowing when to look for a reversal. We're also, it looks like we're in the, I think, yeah, I believe we're also in yesterday's wick zone. Not quite. Just barely. So if we put that back on, so analyzing a chart. Also, using a 3-level ZZ indicator to look for possible reversal points. It's something we use. I mean, this indicator has been so maligned and lambasted, and people say it repoints when it doesn't. It's just pretty funny. It's just that most people never understood it. And I've done videos explaining, the real methodology and, how it was intended. Because most people think it's a reversal indicator when truth be told, it was written as a breakout indicator. And that's why so many people have been led astray and don't understand it. You know, seems like always gets back to just horizontal lines, though. Analyzing a chart. I think I had mentioned about cryptos and how what I was looking to do was just use the lower high, higher low. So you can look here at the daily chart, and you can see this right here. That's like the highest low on screen. And so you see what happened when price broke that, it just fell. And then here was the lowest high. And you see what happened there. And then at the time, this was the lowest high and price moved up. And then this became the lowest high and price moved up. And then once again, when that became the lowest high, price moved up. And depending on how far back you want to go, you can see here, there's your highest low, in the most recent, and then you can see what price has done since then. It's fallen off. So real simple way to analyze the chart. You just basically, you can do it once a day, and you can just move the line if you don't have my indicator, but if you do have the lowest high, highest low indicator, you can set it there. Now, a couple things you have to do if you want to do it for daily. Let's see, we've got the sweet spots gold. We need to set this to auto adjust, so those lines will print better. And then on HL5, instead of 1 minute, we'll just say current. So when we switch to the day, so for the last 34 days, there's that highest low. I'm sorry, lowest high. And you see price went up. And then here is the highest low. And then price broke and came down. So you can just look at the chart once a day, maybe towards the end of the day, and say, okay, I'll put my short here, I'll put my buy here, and then you just adjust it. And so you can use this to exit trades and to enter trades. Now, this is a reversal method. So, for example, if you'd put the trade on, say, right on this day, reversed against you and came down, reversed against you more, reversed against you even more. So depending on where you had your stop loss, you might have stopped off. But then again, depending on where you had your take profit, let's see, 91 on the trigger line, 71 on that open. I mean, there was 20 pips to be had. Maybe you want more than 20 pips, but you open that day with 20 pips. Maybe you put a 10 pip trailer, and then the next day you could have triggered again. And once again, let's see, the low was 71. So you had an opportunity to do a 10 pip trailer again and maybe make another 10 pips. And then here, you had the opportunity. Here, price moved down. And since it wasn't threatened, maybe you put a 10 pip trailer on, or maybe you let it ride since the candle closed down and just see what happened. So once again, that's the way I'm doing the cryptos, because I'm really thinking of them as a lottery ticket, but you can still manage the money, manage that way. So there's no real emotion involved here. You're not really living and dying by every tick. You're not making decisions by every tick. As far as the other exits, as you're seeing here, lower high, lower low, lower high, lower low. So maybe you stay put. It broke that high. Maybe you decided to exit there, or maybe you decided to take 50 pips worth of profit, and be good with it. It just depends on your goal. I mean, if you had 10 pips a day, is what you wanted to make, and then in a couple of days you see yourself up 50 pips, well, that's a week and 2 days. You can take the profit. You can take part of the profit and let the rest ride. It's always an option, and that's something that a lot of people forget. So just looking through the charts here, doing some quick analysis, you can see we broke last week's low. All the gaps filled. And looking at the range here, here's the opening range for the week. See, we broke below that line right now. We're 16 pips below it. So real simple analysis. We got into the opening range for the month earlier today, but it didn't hold. So going short across that line, yes, you would have been against the daily candle color, but it wasn't holding the price. You're in the previous day's wick zone. It didn't go out the top, so chances are it'll come out the bottom. You just don't know at the time. Excuse me. 184 pips above the yearly open. We're through that weekly inside bar, which was last week's weekly candle was an inside bar. You can see that's worth 34 pips at the moment. We're entering previous day's lower wick zone, only 54 pips of range, only 2 pairs over 100. You can see here we crossed below the daily open and haven't really looked back since. And also, notice we completed the return bar from yesterday. Those who see, this is one of those trades where you have to have faith when price is going to come back. When I say no, I put that in quotes because, just based on based on observation, I just know that's going to happen. So, fastest 15 minutes in trading is up. I hope maybe I showed you something new, and maybe you'll try some of those multimeters so you don't have to flip through charts. But whether or not you use them, that doesn't matter, because it's not what you trade. It's how you trade it. So go out there and drain the banks. And this is the TheRumpledOne wishing Wall Mall a happy birthday. And this is the TheRumpledOne, over and out.